Hey everyone, this is a trader investor, and in this video, I just want to go over the market sentiment. We've had some pretty interesting moves yesterday and today. I just wanted to go over how those are faring out and what the sentiment overall is telling us. So I want to start off with the 10-year bond. The 10-year bond, as you have seen today, it spiked up and then it's forming a graveyard doji. It's an inverted hammer, which signals that the market is heading higher. And also that leads the UVXY, which also is forming a lower bar today, which means that the market is heading higher. And that's what we've seen. So during that price action, as treasury, that the 10-year bond was rising, stocks were falling, but then as soon as it reversed, we're starting to go up higher. And the other thing to note here is that we are having an inside day, so the market could break on either side. This is just an inside day. The cash markets have already closed. So I just wanted to recap where we stand with that. And then as we look at sentiments, I'll also show you a couple of my open positions in the indexes. So other sentiment indicators that I use are the VVIX and the put call ratio. The VVIX below 110, it's all bullish signal. The put call ratio below 0.8 is a bullish signal. So far, there's no indication that the market wants to turn bearish. It's just part of the normal process, having pullbacks, and the 10-year bond leading that charge for the pullback, but not a strong enough pullback to where structure is collapsed. So we're maintaining SAVE, which is structure, area of value, and execute, right? So as long as we are maintaining this in our analysis, we're all good to go. So as long as that is no structure is broken, here the monthly trend line is broken, but we have a long-term support that is not broken. And with the VVIX being low, with the put call ratio being low, with the 10-year bond lowering and UVXY lowering, we're still in an uptrend. So that's as far as the sentiments are concerned, that's how I'm looking at the markets. Now I want to show you a couple of open positions in the indexes that I have going, and I will show you why. I have two sets of entry criteria. One, I use the hourly chart to determine, every swing, whether it's high or low. I use a Fibonacci retracement, and if price does not close below the 23.6% retracement, I'm entering a call position. This is what I've done here, but I entered at the break of the highs. So once I formed the retracement at the break of the highs, and we have seen that high happening during market hours on Monday, which is yesterday, and we pull back. We're still not closing below the 23.6% retracement. So my target one is still the 399.50 area, and my target two is 4.3 area. So that has not changed. It's still intact, and we're marching towards that. Another open position is in the Qs. In the Qs, the position that I took is I looked at structure. Structure in the monthly is broken from the trend line perspective, but from a long-term support resistance perspective, it's not broken. So we are starting to make a series of higher lows. So that's what I want to see, is as long as we have a higher low, then I am entering. But how and where I entered this position is on the hourly time frame. That's my entry time frame. I use the hourly. And so yesterday, my actual entry was yesterday. Yesterday when price made a trend line and price kept making higher low, right? So as long as we kept making higher lows. I was comfortable with this trend, and so I entered a position at the break of these highs, which happened to be just the reversal point. Again, that's okay because we're making a series of higher lows, and until this structure is broken on the hourly, then my analysis says we're gonna bounce from here. So we tested the hourly trend line, and we bounced off. If we had closed below this trend line, if we had closed below these lines, this is where I would consider exiting my position. So my stop could be here, or stop could be here. Either one is valid depending on where you feel comfortable with your stop. I usually like to gauge it depending on how price moves toward this zone. If it's a wide move, I might exit at the higher level, but if it's grinding down and I see some divergence in my oscillator, I might consider just holding on until other lower points. But for now, we're grinding back up to go higher. So that's what I'm looking at on this on the Q's position that I have on. And then another position that I have on is in the diamonds. The diamonds is similar to the spiders. I went low to high Fibonacci retracement, price respecting the 23.6% retracement, and I entered the highs here. This is where I entered. Actually, the diamonds have a much shallower pullback, so I'm near break even in terms of entry price, but I'm expecting this to resume its bullish trend over the next couple of days and hit my target 1 up here. That's my expectation. And I just wanted to recap my open positions in addition to show you where the sentiments are. As always, have a great day and enjoy your trading. Make some greens. Be very careful with your risk management. I emphasize risk management all the time. That's what keeps you trading longer. So be watching out for your risk management. Have a great day.